Welcome back to my YouTube channel. Today I am starting a new initiative. Every month, last Monday of the month, I will bring out a title known as Stock of the Month because generally I have been talking about general concept, directions, and all those. So I thought, why not to start something? And in today's context, after this budget 2024, it has become empty clear that in long run one should be investing for long run only. Because if you tend to invest for short run or short term, what you will have is you have to pay more taxes. Short term capital gain tax has been raised from 15% to 20%. Although there is change in long term capital gain also, but it's just from 10 to 12 and a half. So still you have got a good difference between long term and short term. So therefore, friends, it becomes pretty clear that we should be aiming to invest for long term, at least for a year. The stock which I'm going to bring to you today, if you have a 2 years time scenario or 2 years time cycle, I believe it will be double in 2 years. This is from agrochemical industry. And in recent budget, there have been a lot of support for this particular sector because agrarian India needs support. It needs to grow fast. It needs to have more income. And from that perspective, this stock becomes very, very essential. So let's proceed and look at what stock we are talking today. So before I proceed, I would like to mention here that investing in stock is risky. So therefore, before investing, do your own research or talk to your investment advisor. Purpose of this video is purely educational. Idea is to bring it back to you so that you can have further research and take your own decisions as per your requirements. So let's get moving. The company which I am going to bring to you is from agrochemical industry, as I mentioned to you. The company, its name is PI Industries, leading agrochemical space, having strong presence in both domestic and export market. If you look at, their 70% plus revenue come from export and about 25% comes from domestic market. And here, in two main categories, 70% revenue come from active ingredients, intermediaries, and revenue from sale of formulation. So they do both formulations as well as ingredients. So the company is well placed. When you look at their financial market cap, is 66,700 crores. So this is number one in agrochemical space. Current price is 4397. Although last few days after budget they have been sub run up, but still it has got a lot of potential. I bought this stock 4 5 days back. The price was a little lesser than this, and stock P is about 40, and book value is 575. When you look at the intrinsic value, it's 2,185. Against that, it is selling at about double the intrinsic value. Normally, good stocks are not available at this price also. When you look at the PEG ratio, it is 1.20, which is much in the investment range. More than 1.5 PEG ratio, I believe that is more actually. When you look at the return on invest equity, 21.1%. And price and when you talk about the growth, sales growth in the last 3 years has been 18.8, and profit growth in 3 years has been 31.6. And it is almost a zero debt company. Debt is 0.02 debt equity ratio. So almost a zero debt company. Let's look at the price performance of this company. So when you look at the price in the last 3 years, you will see that price is more or less have been static, except the run up here a little bit last few days. Price has been quite static. So almost it has been in a range in the last 3 years. Does it mean that the company has not been performing well? We'll see that as well. Or what has been happening? If the company has been performing well, there should be run up in the price. Friends, many a times in the stock market sectors, certain companies, they get into a sort of like consolidation mode. So this has been consolidating for a long time. So here we do a further analysis, and when you do a further analysis, we'll find here, like let's look at the P ratio. When you look at the P ratio about 5 years, the median P is around 47, whereas the P current is 39.6 or something. So it's still much below the P ratio. And look at the performance. It has been going up consistently. So it's a consistent performance in the last 5 years. If you look at 10 years numbers, same way actually. So starting 2018, last 6 years, there have not been a looking back. It has been every quarter performance has been bettering. And since the price was static, the price earning ratio has been coming down. So here sometimes to us like against 55 PE about a year and a half, 2 years back. Today it is trading at about 39. So there is a huge scope for appreciation here. And let's look at the their peers like UPL, Sumitomo Chemical. Sumitomo Chemical is also a good company, but when you look at relative valuation, PI industry has a much better valuation compared to Sumitomo Chemical. So therefore, I believe, and looking at the focus of the government, I believe the sector will perform exceedingly well. Let's look at this one more data, profit loss. Here, I always like to look at here. Look at the growth in last 3 years. 32% CAGR in last 3 years. Profit growth. Whereas how much price has grown? 13%. TTM's 37%, price has grown 17%. So although it appears that it has gone up, but there is a lot of catch up required here. So 37%, 13%. So price has to go up significantly here. In the near future only, you can see a price difference of 20-25%. Let's look at some other details about the PI industries. When you look at this detail, here I would like to draw your attention to the forecast actually. Forecast of the price. Here, if you look at the price forecast, the aggregated forecast by different analysts, they expect that maximum it can go up to 5,500. So at about 3,000, 4,300 price today, it has got potential of 20-25% in near future. And I strongly believe that if you hold for 2 years, this particular company will double from the current price ratio. Let's look at who else have got interest in this share, particularly the DII and FII, because they endorse our understanding. So from that perspective, when you look at the forum on the money control, 100% people are in favor of buying this share. So here 100% buy recommendations you have. And when you look at different recommendations, all buy, and you can read those details. But when I come back to the DI and FI holding, like promoter holds around 46% share, which is decent. FI holding around close to 18-19%, and 19% they have been a little this one, and DII, in fact, they have increased their holding to 26%. Public has only 9% of holding. So basically, not a lot of floating stock. Whatever stock is there, that is grabbed with FI and DI. So whenever there is a change for this particular script, this will go further up actually. So friends, I have just taken you across a company in the stock of the month series, a company known as PI Industries, which is from agrochemical industry. Company is a leader in that sector. It has not moved a lot in the last 3 years. So it has been almost sort of consolidating in the last 3 years. Government has a push on this industry. Today it is available as an attractive valuation in this high rising market. So although there have been some rise in the last 3-4 days, but looking at the overall scenario, it appears that I think in the near future, you can see a change of about 25% upwards. And if you have a holding period of 2 years plus, I strongly believe that company can double in 2 years. So friends, do your own analysis. And if you are convinced, you may like to invest in this stock. So I hope you have liked the deliberation today. You have liked the deliberation. Don't forget pressing like button and forward this particular video to your friends. If not subscribed, please do subscribe to the video, to the channel, so that more and more people can be benefited. Thank you so much for your time. Jai Hind, Jai Bharat.